No, he doesn't know. Yeah.
Right. Good morning. Seems as though we're only here yesterday. Oh, we were. Right. Thursday, Bank of England Day. Obviously, all the homework we're geared towards the Bank of England. Those of you who stay for the FOMC, we saw why the market was quiet all morning, and obviously from 6 o'clock, the market did explode upward as Mr. Powell got the Oscar award for the most improved actor performance in keeping the FOMC on a straight and narrow curve going up. Right, as we see here on the screen, this is the ING details of what is going on for the Bank of England. I'll go through it quickly while we're here. There's a lot of thought at the moment that the Bank of England is more likely to raise rates, and we'll go through that quickly in a minute. Why? We knew that the FOMC probably were going to do 15 billion of tapering, which they did, and leave rates unchanged. Now, the Bank of England is slightly different because of the comments that certain people, Mr. Pill, Mr. Bailey, and a few of the others have mentioned, obviously, in the past. Now, that's at 12 o'clock. We'll be doing a Zoom at 11:50 to go through it here. Here, what they're going here. Remember, there's 9 people voting. So if there is no rate hike, which I think a few people think there may be, what will happen here is that the market is expecting a rate hike, and therefore the pound will probably come off. The FTSE should rally in my view. We don't expect QE to move, maybe a bit off the ones FMC, but it's not in the market really. Of their 875 billion, they've already put it in as such. Therefore, here the 1.5% hike. Remember, we're at 0.1. That will take us to 0.25. Not unanimous, but a lot of people said that is in the market. That's why the pound's rallied, and therefore we're looking at that. That to me would be the limited impact, as it says here, because of inflation and because of what Mr. Bailey says, that we're above the 2% threshold. Anything above 3%, he has to write a letter to the Chancellor telling him that inflation is coming out of control. 0.4% basis points hike. People say that's ridiculous. What do you mean that's ridiculous? What we're going to do here is obviously we're going to go into here. Those of you who have done before, we mentioned briefly FOMC. Short sterling, short-term interest rates. Quick lesson, rub it up here quickly. 100.00 is zero interest rates. So 99.90 here, roughly up here, is where our short sterling should be. That tells us that rates are 99 is 0.1. Yeah, okay, we're not there. If we look at euro dollar, their rates are 0.2, which is 99.8. They're showing you here 99.7 at 99. So their rates are exactly where they should be. We've got that. Euribor, ECB, Europe, their rates are negative 0.5. 100.56 equals rates at negative 0.56. The Swiss exchange, their rates are negative 0.75. 100.77 equals minus 0.77 rates. Fine. Short sterling, this going here, December here, we are showing rates here at 0.45 as of today. Yeah, Bank of England meet today and they meet in December. So they're telling us here, although that they tell you the rates today are 0.1, if you went to the marketplace now to get money, it would cost you a 0.45. Now, if we go to March 22, remember the short sterling trades 4 months a year, March, June, September, and December. Yeah, they've got rates here at 99.13, 4 months' time. That is showing you rates at 0.87%. Now, in 3 months' time, does that mean we're going to have to raise our rates by almost 0.8%? And we've only got 3 meetings until March. Or maybe it's 4 meetings until March. So therefore, that's the conspiracy theory coming on here. Why the Bank of England, a lot of people thinking they may have to raise rates today by a quarter, if not by a lot more. So therefore, that's the conspiracy coming into that theory, and that's why a lot of people are thinking there's going to be a lot of fun and games coming into 12 o'clock. So remember our Zooms at 11:50. Read the articles that we put out there. There's been a lot on the discussion group. Right, let's go quickly. We've got a few minutes, not a lot actually, of time to go into for the opening. Again, Christian Lagarde's come out again, and that's why the DAX has pushed up here. Well, we've got DAX up 85, that's 0.5%. Even the FTSE as well, but she said that interest rates will not be going up until 2023. We have a lot of the ECB people talking today. Let's go through it with factory orders that are slightly weaker. We've got interesting PMI construction at 10 o'clock, ECB PPI, producer price index was inflationary, but remember, Christian Lagarde tells there is no inflation, and even Mr. Powell told us that inflation is going to disappear by Christmas. 11 o'clock, the COS speaking, super dove. 12 o'clock, the Bank of England statement comes out again, yeah, and therefore Mr. Bailey officially speaks at 12:30 again, and we think he may speak at 2:15. Lagarde speaks at 1 o'clock, and Elderson, the Hawk, he just said nothing yesterday, speaks at 1. The Fed confirms plans to confirm tapering of 15 billion. Fed patient on hikes and cannot inflation whenever he wants. Did a great show, got his Oscar. Lagarde, the ECB, is very unlikely to hike rates in 2022. The Bild Press, the German big newspaper, I put on discussion here, had a very personal attack on Lagarde on her wealth and her view on inflation. Now, the other thing that's come out is new. China, who had no cases of COVID for last month, have now got 16 of their, how many provinces they've got in China now are almost shut down because of outbreaks. Bank of England, 9-0, 6-3. There's a big rumour on how they're going to vote. We know roughly which way they're going to vote, so it's going to be very close to going in there and what to trade. Remember, we've got long gilts. Remember, we've got the pound cable. And obviously, we mentioned short sterling, but we'll come on to more than that after our 11:15 meeting. But to me, I think the market's expecting a 0.1% rise. The other one, the infrastructure room, we mentioned it yesterday when Corey, the American, come and told us that vote is supposed to go through. But that's Biden's vote of 1.5 trillion is supposed to go through on Friday. I know we say this every week, but if that goes through, it's probably a positive. The debt thing with Yellen is yet to be formalized. Right, let's have a look at the market here. What have we got here? We don't expect much in the FTSE, obviously, because we've got the Bank of England up at midday. But what we've got here, we've got the DAX currently. We haven't got. We've got here. We've got. Let's put on what data we've got here. We're the 4th up today. Yes, sorry, I've got the wrong date up here. I do apologise. Again, the value, we're roughly between the P. So again, it's very the way the POC, the value high here, what we come in here, 8 o'clock, no news coming out up here. But again, we've seen some solid buying from last night. and we saw that very much the market profile yesterday. When we do get a bull market, they tend to grind higher. A lot of people said that to be very patient, especially when they're speaking yesterday on the market. If we look at again, MNO here last night when the market did pick up, we said here the single print was when we realized when Powell was speaking yesterday, the market would not have turned. The bull market was in there, and we're keeping the bull markets here to rally as such. 8 o'clock coming here, fairly quiet in here. FTSE again, not really doing like this. Put it on a 3-minute chart. You know, there's a lot of reasons for, if you are trading the FTSE here, if they are rumors that they are going to raise rates more than 1.5%, in that should be detrimental to the FTSE as such. On that 3-minute chart here, we have seen the selling start to come in here. But to me, if you are trading UK stuff, you'd be mad not to wait until midday. Rumors, conjecture. So we could find the DAX rallying because of Christian Lagarde's comments saying they don't want to raise rates, which obviously massively will contradict to the Bank of England if they do raise rates. So if we do raise rates by 0.5, the disparity between Europe and the UK will be what 0.75%, a whopping distance. They do it by more than 0.15%, which in my view would be great for the market. We'll see all markets move. So get yourself prepared for that. The thing we put up here, markets fairly FTSE coming off, not by a lot. Remember, we're already up 26 points here. We could come back to where we were. Let's put it on a 30 minutes. Almost back down where we were back down here, really. What price we were down here? Back to remember where we were before Power spoke, 72.36. That be flat in the day. And again, let's have a look at the DAX at the 30. Remember, we're already 76 ticks up. Again, where we were here, we're almost 100 ticks higher than we were when Powell sat down. DAX, we're bang on the POC that value low as such, and in theory, we might want to see us. I suppose you really want to bearish down to the figure again. Because it's Thursday, we do think that the market as such has a what do you call it, legs in it to have a big range today. Yeah, because it's Thursday, because all the news that is coming out on Thursday. So bear that in mind. I'm just seeing that the DAX, does it hold in here around about 32, wherever we were. That's where we've got the POC value low, and obviously we've hovered around there, and that's the current low. Again, when the market's all thin, there's no news out. We've noticed that this week, that market profile has been a savior in that. Keep it simple. You don't have to be too clever and work out whether when we get rallies here, the value high and the value low as such. Again, where the proof in the pudding is, we said yesterday that some people said to me, what's more important, technicals or fundamentals? We said to her yesterday, if we look at the S&Ps yesterday, we've got it in here. Now here, obviously, those who have done a course have been me and Jerry. Letter prints here. The POC in theory, yeah, in the S&Ps yesterday. Let's get on yesterday's thing and see it here. Is here POC here 4627. Obviously, we're way above here now, but here we have 27 letter prints here at the POC. 27 equals 13.5 hours. Now, in between that, yeah, that was because everyone was awaiting Mr. Powell and the FMC. M was at 6 o'clock when they made the statement. Now, from 6 o'clock, yeah, to 8 o'clock, those 2 hours, MNOP, where we came up here, yeah, the market exploded. But before that, the market respected that nothing was going to happen until A, the statement came out, B, Mr. Powell spoke, and you had the Q&A. So therefore, here, around a POC, there was no point trading whatsoever. And for 13.5 hours, basically no one did. Yeah. So therefore, we would expect that again very much in the FTSE this morning, unless any big rumours come out that the market has moved otherwise. But in theory, until then, I think it's safe to say FTSE, we could be very much stuck in a range. So bear that in mind when we've got here again. We'll be sending more of the things out here. Everything is geared today for 12 o'clock. Again, for the Bank of England. Remember, we've got the pound to trade. Higher rates expects the pound to explode. 0.15 in the market. No rate hike. We expect the pound to come off. We expect the FTSE to rally, and we expect the gilts to rally. All those things to trade. There's no real point trading the DAX. There's no real point trading Wall Street or anything else. When the Bank of England comes out at the midday, it's all about UK products. We showed you short sterling, how much that can react, and they're basically going. The market's telling you they expect the rates to go up. So they don't go up. They don't go up today. It means that they expect the market to go up by almost 0.4% on December the 16th, and then we've got 6 more weeks to come in there. So we could be. My view is, I think we might be 0.25. They haven't got it in here. I mean, I'm not begrudging ING, the bank they are, but I reckon we could be in between here. We don't expect any taper. So a lot of things to go on today. So again, like we said yesterday for the FMC, it's the same for today really. Keep your powder dry and until Bank of England comes in. A lot of people kept their powder dry, didn't trade until 8 o'clock, went on price action alone. And obviously, Mr. Powell came out and batted with a straight bat and kept everyone very confident. In a way, probably almost talked himself into the job for the next 4 years. But again, we're not seeing much movement here on the first 5 or 6 minutes, and we don't expect anything. Just because you haven't traded on the open doesn't make you a bad trader. It makes you a patient trader. And remember, we still got 12 hours of trading left, and I think we could start kicking in, obviously, from midday today. Right, we'll be back at 11:50. At the moment, if anyone sees Jerry, can you tell him he went missing? He went AWOL yesterday with on a date somewhere, we reckon. But if you can find him, please put him in touch with us because at the moment he's absent without leave. Right, we'll come back later for our one-to-ones, and obviously at 11:50, and we'll probably do was it a 1:20 Wall Street Zoom as well. Okay, we'll speak to you later.